Hi friends, so let's start with today's analysis. Before we go to the Indian markets, we'll just take a slight glimpse of what has happened in the global markets. Generally, why I take a lot of time nowadays for global markets is because we are affected a lot by global markets. We know that the major factor in our market, which is prevailing right now, is the foreign investors which are trying to take out a lot of money. So we need to understand why they are taking out money. What are the triggers which will allow them to again be bullish on India? Because they are the net sellers and they are only moving the markets as of now. So we'll start with the US markets on Friday. Friday, the retail sales number came from US. It was below par. And it was showing that the economy is quite weak in that way. Although the market didn't react to this news a lot, but the retail sales numbers were not good. Inflation numbers we already discussed on Friday. Also, the market was very happy with the consumer producer price index, which is the PPI data. The reason was that it was slowed down from the last month. Moreover, the personal consumer data, which the Fed actually watches, it was showing signals. If we go in depth in the numbers, that is slowing down. So the market took it as positive, and they reacted accordingly, and we saw a rally in terms of the markets in US. In US, Dow actually closed in red, but Nasdaq closed in green for consecutive 3 days. Also, so we'll get the full numbers of personal consumer expenditure which the Fed watches at the end of this month, and that will give the direction to the Fed in terms of the interest rates amount. But we already seen the kind of dot plots, and we're not expecting any rate cut from US at least before September. The industrial production data also came in US, which was good. Also, their capacity utilization data came, which was around 70, above 77, which was again good. So, and mixed type of numbers are coming. Labor report we've seen, it was good. So, some numbers are coming good, some numbers are coming bad. So, it's a very mixed kind of a report and very difficult to judge whether the economy is slowing down or not. As of now, it is looking like the economy is slightly slowing down, but it is not slowing down at a pace which the Fed wants. This is what we can make out of the numbers of US. Why it is important? See, one theory has always been that the relative growth between US and India is not so great, and that's why we should put out money in Indian markets. Let's put into our mother markets only. And anyways, the bond yields which are there are hovering around good levels. So why should we a net investor in a emerging market which is considered to be a risky bet? So that is why I'm telling why the US economic slowdown is important for us. If it is slowing down only slowly, that is also fine, but at least it's showing signs of topping out and probably on a gradual decline. Even when whatever Trump has done or whatever he has taken the measures, it is showing as a signs of gradual decline, which will always make the FIs some kind of a case moving forwards. I'm not saying in this quarter, but moving forwards to again shift to the emerging markets. We'll discuss this point in detail in the forthcoming video also, just in some time, why I'm saying it. Uh, so also we got the Japan GDP data. It was around 0.7%. The expectation was around 0.3%. Japan GDP is hovering in those levels, and probably Japanese markets have benchmarked themselves to these levels. They go 5% lower and 5% upper, but they've glued themselves to these levels now. Remember in 2024, a trade played out where the Japanese index were around 22,000, 23,000 levels, but in 1 year it reached to around 40,000 levels. There was almost a jump of 30-40%. That trade is now played out, and probably Japanese have also slowed down in terms of their growth now. So this will again be advantage that a lot of funds, including Mr. Warren Buffett invested a lot of money in Japanese markets. That market is also slowing down, or it is consolidating, we can say. Two more very important things happen in the weekend. So the Security Council of US have told that we would be initiating the peace talks between Russia and Ukraine very fast now. These peace talks will happen in Saudi Arabia, and yes, there will be a lot of members who will participate into it. They gave a hint of Europe also that they will also participate in the talks of this peace process, but that is a good thing again because we all want the war to end. It will add a lot of capacity utilization in terms of crude oil into the markets, and also this geopolitical tension which is growing up will slightly slow down. Also, there will be a tectonic shift in terms of the world order also now. In the Biden administration, Russia and China came together a lot. They came quite close. Now probably we'll see a new dynamics wherein Russia will again try to come close to US, or at least become neutral. So it will be a geopolitical shift, and when these kind of geopolitical shifts happen, it not only affects the political scenario, it affects the economic scenario a lot. So how are you trading with the partners, the deficit of trades, import export trades, all these things change. That's why it's very important to note all these things. That's why I'm taking time on all these things. So that's again one more thing happened. The rate of closure of the Israel Hamas war also has gone up. I think around 369, 370 hostages were released by Israel. The terrorists which were there, they were released by Russia, by Israel. So that is also going on at a good pace, and probably a lot of warmth and a lot of comfort is coming from those levels. So geopolitical scenario is slowing down very fast, which will keep the now the crude prices in check because of two things: drill baby drill, which has come from US, and of course the this geopolitical tensions which will come down. The premium, a kind of premium which was there for this crude oil to stay at those levels will come down. And as I'm saying, if the crude oil prices come below $70, around 65, it will be a huge plus for India. Huge plus for India. And I can take a whole video why it is plus, and many of you know also. I don't have to repeat that, but it will be a huge plus for India and our stock markets as well. Just a simple point, I would say we are a net consumer. We all know that we are a net consumer of crude, but a lot of our companies know raw material input costs are derived from this crude oil. So today, what we are seeing the struggle in terms of profits going down, of our earnings going down, that will start shifting up. Trump again confirmed that he'll put the autos also into tariffs, which is going to announce on 1st or 2nd April. So we already know that. Nothing new which has come from that. But two things which has happened good now is, one thing is that the bond yields have cooled off from 4.8 kind of levels to around 4.47. So that's again good. That means that the US markets are now starting to believe that inflation would not go up too drastically. Trump is softening out. He's putting out the tariffs in phases, and he's ready to negotiate and bring things on table if at all it favors them. So that's again a good news. See, we wanted these things to cool down. If the bond yields come around 4%, then again Indian market will start looking very good. Indian, what I mean is emerging markets. Because then the differential goes down, and then the reason for taking out money from the US market start becoming prominent. Also, dollar index today was, at least it opened around 106.65. That was again a good level, although it has now reached up and it is hovering around 108, 106.8 levels, which is also quite good for us because it is showing signs of cooling off. And I can again say that the 110 level of dollar index is topped out, will never reach there. Rupee also opened around 12 paisa higher, which is stronger. And I think we were trading the entire day around 8 to 10 paisa stronger, which means rupee has also started to showing signs of strength. It is showing a sign of consolidation. It is showing a sign of bottoming out. And this is again the important trigger with the which the FIAs actually wanted. So that's again a good news for FIA's point of view. India has reduced the import duty of Bonbon whiskey, which came on Thursday night, the market, and I also could not take full resemblance of it. But so India has reduced this Bonbon whiskey, which comes from US, and the duty has been reduced from 150 to 100%, which means that India, and we already done some things in our budget also in terms of foreign bikes, import duty reduction, and some kind of cars duty as well, which means we are trying to impress Mr. Trump, or at least trying to give signals that yes, we are ready to reduce the tariffs. And anyways, we're increasing the defense expenditure, which will again shorten the probably the trade deficit. All these are good news. All these are giving confirmation that 2nd April will not be too bad for us. Now, one more news which was, flashing in the entire weekend was that a lot of money is going to China, a lot of money has been taken out from India. So I'll just give you the figures and I'll just give my point of view on this. So around $1.3 trillion of money has gone into the Chinese market since the DeepSeek has been announced. I think 2 weeks or 3 weeks before their Chinese New Year. And around $750 billion, which means around $0.75 trillion have been taken out from India. It necessarily does not mean that the taking out of money of India is all gone to China. But yes, there has been a shift of money, or at least the hot money. What is the hot money? The hedge funds money has gone to the Chinese markets to play that momentum. That's for sure. How much the momentum will last, what will happen, it's all a bet. It's all a, it's all anybody's guess. Moreover, Chinese markets have still not reached to a level where, there was a sudden rise in the markets when they announced those uh, stimulus into the economy and all. Still hovering below that. A lot of money, whenever it goes to China to play this momentum story, it always fizzles down and they make a big loss. Moreover, their property market has wiped out $18 trillion in last 3 years. The entire economy of Chinese market is around 17.5 $18 trillion, which means one time the GDP has been lost in the property debacle which has happened in Chinese market. So they are suffering. Moreover, they are undergoing deflation. The prices are continuously coming down. So Chinese economy, in spite of all these things, are not good. Moreover, US has already announced a tariff of 10% on China, which nobody is taking back. See, there is no talks between China and US as of now. Nothing has happened. China has announced some tariffs on US LNG, petroleum products, some other things. All those are valid now. So the money has started flowing from these tariffs to both the countries in whatever tariffs they have put. I think this will not allow Chinese markets to rebound too sharply from here. Yes, some money has gone from into their technology companies, around $1 trillion, which I already told, $1.3 trillion. So there has been a churning within the Chinese index, but it's not that it has become very lucrative for anybody to invest a lot of money in China. See, anyways, so if I give you one more figure, in MSCI index, China is trading around 11 times forward earnings. FY20 earnings of a discount, it is trading around 11 times. India is trading 21 times, double. You know, so anyways, the valuation comfort is always there in China. It's always been there. It's not something new. This kind of valuation comfort has always been on China. It's just that churning of money, that hot money which plays momentum, and that kind of a shift in terms of technological stocks because of DeepSeek has gone into China, which I think is not wrong because DeepSeek has been a game changer. It has shown to the US markets that you may burst a lot of money to create technology or to invent technology. We are smarter than you. We can create your technology at your level, but at a much lower cost. And that is why China has been a game changer for the last 20-30 years. They can make things at a lower cost. So that trade, how much that trade has played out, I don't know. Does it make China more attractive? Yes, there's no doubt on that. I also agree on that. How much money will shift? I don't know. Whether the entire trade has played out, I don't know. I just know about my markets, and I'll come to that in a while. But this is what the things are flashing in the uh, weekend. One more thing: if anybody wants to invest in Chinese market, it is not necessary for them to take out money from India and invest in China. Believe me, FIIs have tons of money. Tons means tons of money. They need not take out money from India to invest in China. They are too big for that. So yes, the numbers are showing that India it has flown around $0.5 trillion. China it has gone $1.3 trillion, but does not mean that Indian money has gone there. They are pulled out of emerging markets as a whole, but with this deep sea thing, they have invested a lot of money into Chinese market. That's what has happened. It will continue. Yes, I think it will continue because it's a game changer. But it will be a shocker to the US more than India. If somebody has to really play that trade, then sell Nasdaq. And anyways, I've told my previous video also, Nasdaq is really, really overvalued. Next kind of a burst will only come out from Nasdaq. It is highly overvalued. Even the US markets are also highly overvalued. It is, you talk about earnings, MSCI index, if you talk about US, I think it's trading around 26, 27 times forward earnings. So they are much, much higher in terms of valuations. Vraspat, what they are actually earnings. They talk about valuation about a lot over India. They themselves are valuations are very high. So, but one more thing, the China MSCI index has been outperforming India for the last 3 months. We all know that because India has gone down in the last 3 months a lot, and China, even if it has not gone up drastically, it has remained stable and probably it has gained around 5% or so. So in that way, we all know that MSCI China has really outperformed India. That's again a point which is there. But and I told you what China is anyway suffering in terms of the property market. Their average age has now gone to 39. They're undergoing deflation. All these things will not allow the Chinese markets to shoot a lot. This is what happened for Japan also. If you see 1989, these were the reasons where Japan got a hit for next 30 years. So it will not allow the Chinese markets to grow drastically. Some kind of churning will happen, which is already happening, or it is slightly something more is left out. It will happen in some few days or few weeks. Now, one more thing happened in the Argentina market. I just take 2 minutes for Argentina. Also, very important to know. It just teaches us a lot. So in Argentina, there was a post which came from Mr. President, as it's shown on X, Twitter, which is there now called X, that they are bringing a Libra, which is a kind of a crypto currency, and suddenly there was a jump of around, I think, 100% or so, and a lot of money came around. I think. I don't know, I'm forgetting the figure name, but a lot of money came into that crypto and it shot up a lot. But suddenly that post was removed and 94% drop happened in one single day in that currency, in that crypto. The retailers lost 40,000 crores of rupees in just 24 hours. Around uh, 6 Arab dollars worth was wiped out in 24 hours. And who was a loser? A retail trader. That's why I say don't jump on news, don't follow the things like this. And if the president is not even taking ownership of it, he's telling, I have not posted it, I don't know how it came and how it vanished. So nobody's taking any care of it. What has happened is it has wiped out $40,000 of money from the retailers' money. And that's why I feel very much pained by all these things. Don't run after these fancy things. They have no intrinsic value. See, when we analyze stocks, we see a lot of things: intrinsic value, what are the things, what are the P levels, what are the how much money it has, what are the cash it has. Crypto में क्या है, guys? Nothing. Be very careful by all these things. These are not the things. In spite of that, instead of that, you invest in gold. I've already told you, China is investing a lot in gold. US is investing a lot in crypto. You will see who are the net winners in years to come. It can never be US. So that's another part. Now let's come to our markets. So we again wanted, so first thing is that we have defended 22,800 4 times in a row now. So is this the bottom? See, very difficult to say, but the price action again saying that defending 4 times in a row, 22,800 means it is forming a base. And it is forming a base very solidly now. Because you're investing time on it, a lot of buying is coming from those levels, which means it is forming as a good base. So that is for sure. Now it will not be easy for the markets to breach these levels so easily. Moreover, a lot of put writing has happened today on these levels, which means again the put writers are heavy on those levels, and this will now hold up. At least it's looking like for the expiry, this level should hold up. We wanted a lot of volatility, so when the market opened, we were around 19%, 19 points down in HSN Nifty, but we opened 120 points down. We went to around 250 points down on Nifty, and then we again covered up, which means it was looking like a set game that I will open lower. I will spend a lot of time below. I'll cover off all my shots, and then I will take the Nifty forward. It was looking like a very set kind of a game, which I have always told now that already DIs and our retailers and HNIs have given up completely. Now all the games are only played by FIAs. That's why I'm taking a lot of time on global things to connect the dots, whether this is becoming important, whether this market is becoming lucrative for them or not. So ultimately, what is happening? They just played with the markets. They kept the markets low. They covered their shorts, and they closed also with a slim margin in terms of green. But two things good that has happened. Three, four things which is good for us is high volatility. Today VIX was very higher. Uh, we opened much lower, capped down. A lot of short coverings happened today. We have closed in green. So these are 3, 4 points which have, and we have defended this level 4 times in a row. But what is bad? Bad means what I really wanted something more. I would have wanted that we would have gone green, red, green, red, green, red 2, 3 times. That did not happen. Which means it was purely short covering. And see, when there is only short covering, there are chances of these rallies to fail again and again. We want buying. We want that the buyer is fighting with the seller. That did not happen. So for me, that is a slight negative. Uh, is one more capitulation left out? I doubt now. I think the capitulation would not come at these levels now. It might come at 23, 100, 200, 300, 400 levels. Those kind of levels where 20 day expansion moving average is placed. That kind of level we might see capitulation, but probably at these levels now, I would feel the capitulation is done. If at all new short would have been made today, we would have closed below 23,000. We have closed above or around 23,000 levels, but in green. It is looking that the base have been formed, a lot of put writing has happened, and some kind of volatility we have seen in last 3 4 days. It's not that it has been entirely one sided, but again, as I say, it is purely short covering. It is not a buying which we wanted, but okay, that's okay. That is again onto the Indian market, but the large caps are now trading at a discount. Small caps are still costlier because the earnings of small caps have been actually 18 to 20% cut instead of a rise. The earnings of small caps have actually been 18 20% cut, which make them even more costlier. See, if the earnings would have been risen, they would have also become cheaper, or let's say they would have been trading at a discount after dropping around 20 to 24% from their highs. But since the earnings have also been cut, it is still costlier. So small caps, I would say, they have a chance to fall, yes. Even if they will not fall, they will remain sideways for some time. Or if the markets are going up, they will go up less. When the markets are falling, they will fall down more. That kind of things may happen, but it's still costly. And there are still some falls in the small caps. Mid cap is just kind of a neutral, I would say, because the earnings have gone by around 6%. And they are just close to, not close, in fact, they're higher than their averages for last 10 years, but still the earnings are going up. You can say it is just neutral. But Nifty, or let's say the large cap or ultra large caps, they are trading at discount. They're trading at around 18 times to the forward earnings now, as against the average 20. And the net earnings have also gone up around 6 to 7%. So I think those are now available at discount. And that is the reason why the markets does not want to fall below 22,800, even if they want to take out a lot of money, even if the FIs really want the money to be taken out still, but they are not able to take out because of two reasons. One, they reached to a level where if now they sell, the Nifty will become much, much more attractive. So they don't want to sell their shares at attractive levels because you can't sell their levels, you can't sell shares at fair value. Then you are giving a chance to somebody else as a gift that you take my shares at a lower price. That why they are jammed by this action. Second is because you have to diversify. You can't put everything into US markets only. We all know what has happened in Argentina now. Argentina again is a corrupt country. These things will happen, keep on happening. India is giving them the comfort in those things. Moreover, whatever selling is happening at thin volumes. So even if the prices have come down in last 7 days or so, the buyers are not there. The sentiment is so down. So whenever the market is built sold on thin volumes, generally it forms a bottom. Seller also thinks that I have sold a lot. I cannot allow the markets to go down from these levels. I want the market to again go up. Let the sentiment rise. Let there be buyers, and then let me sell. Which takes me to a point of a W-shaped recovery, which will happen into the markets now. Assuming that 22,800 we have formed a base, which it looks like, then we'll go for a W-shaped recovery, which means we have already come down. The 1 lakh of W has started. We are trying to form a base up or a bottom or a kind of a level. We'll show some recovery up, right? We don't know to what point. That is the biggest guess, and that is the hard work now we have to do. That what the point this rally will go, then again come down, and then a real recovery will start. So now this market will enter into a W-shaped recovery. So if you remember, we have fallen from 24,800 levels. We went up to 23,350 kind of levels in October. In November, we again went to 24,800 from where we collapsed. Then again we went to 23,250 and probably in December. Then again we rallied 23,800. That is a budget level, I think last 2 weeks before. And then we again collapsed to 22,800. So that has been our pattern. According to me, this W-shaped recovery should at least hit that 23,800 level, the budget level. We might see some points up also from where it should fail again. So that is the kind of market action which I am expecting now, considering those all things which I've told, what is happening around the world, how the US markets are topping out, dollars becoming good now, rupees becoming stagnant or falling good now, the wars are coming to end now. Chinese market, that hot trade which was there has already played out. Money has already gone to their market, $1.3 trillion. India has come to a sweet spot now. The earnings are looking good, the levels are looking good, the valuations are looking good in a decent way. And we have already announced a lot of things in terms of RBI cut and all the budgets and all those things. So we should aim for a W-shaped recovery from here on. That top point of W is the question mark, or it's the biggest, talking point, or let's say the hard work which you need to do to arrive at those levels. Which I will keep on doing it, and I'll be sharing it every day. But as of now, the markets are looking set for W-shaped recovery. I don't expect it to become a U-shaped recovery. The reasons are that we are still, the valuations are not so attractive. The GDP growth is not showing signs of recovery and all those things. Once we start showing signs of GDP growth recovery, then we can aim for a U-shaped recovery. As of now, the indicators are not showing that, so we have to wait and watch. As of now, it's looking like a W-shaped recovery. So let's try to spend more time in coming days to find that top point of W. That will be the hard work, which we'll continue to do as a collective effort. So this is it from today's video. I hope you liked it. Thank you so much for your time. Thanks so much.